So, the market's running into this big event season. And it's, let's face it, beyond the banks where there's a big debate going on, we are still practically at all-time highs, 2% away from that mark. What is the sense? I mean, budget and beyond, are you expecting this bull charge to continue, or are you expecting, perhaps some consolidation? And how is then, therefore, your portfolio positioned?
Thank you so much for having me. I think the budget should hopefully be largely a non-event because it is a vote to account. It's not a full-fledged budget, so it's not really something we're expecting to see a lot from. Our view, and this is more specifically on the large and mid caps, we believe that the current optimism should effectively continue. What you are seeing is a very, very strong foundation for longer-term growth in the Indian economy. A lot of different segments of the economy are coming together and kind of fire. And which is where you're seeing this level of optimism in real estate, in capital goods, in manufacturing, various different segments which have pretty much over the past decade really not participated. What you had pretty much over the last year is you had multiple headwinds that the market was being forced to deal with. Inflation and interest rates really being very, very important. Now, if you look at the current year, I think very clearly we are looking at a year where interest rates are likely to decline. The Fed has given an indication of up to about 3 cuts over the current year. The timing is uncertain, but we are likely to see US Fed rates be cut. We're likely to see interest rates in India being cut. Now, this is something which should be quite positive for flows. We are looking at India being very positively viewed from a global context. Other major kind of markets, be it China, be it Asia, most of Europe, these are all struggling to perform. It's really just US and India that are the two growth stories globally. And we kind of believe that this should help continue kind of FI momentum that we're currently seeing, and retail participation is actually very strong. So given the entire context and the construct of the market, pending any major kind of disappointment, either around elections or big flare-up in terms of what's happening on Israel-Palestine, current kind of concerns in the Red Sea, barring some of these, we are very positive in terms of the market outlook for this year and also going forward. But this is more on the large caps, not so much on small caps.
All right, so let's drill it down to the specifics. You like large and mid caps, not so much the small caps. What sectors do you like? Are there any specific areas of particular interest to you which you believe will outperform going forward? And what do you think has run up ahead of its valuations?
So just broadly in terms of sectors that we are currently overweight on, I think digital and digital platforms is clearly something that we've been quite contra on the market, and it's something we continue to be extremely positive on. I think you've seen Policy Bazaar's results yesterday. They've turned profitable. You've seen Zomato turn profitable. We believe the space has tremendous growth potential over the coming decade. Market concerns around profits are being addressed. We have done our own long-term calculations. We've studied these cost models in great depth, and we believe these companies will be very profitable over the longer term. Because it's a very narrow sector, performance in a particular year is difficult to say, but it's something we're very optimistic on over the longer term. Other themes that we like are selectively capital goods, real estate. These stocks have kind of run up quite significantly. But if you're just seeing real estate, for example, it's a space which has moved up tremendously. But if you look at DLF's results, DLF has kind of posted $1 billion plus of quarterly pre-sales. They have front-ended the development portfolio, and they've also included incremental price increases, which has led to the pipeline increasing from 40,000 to 80,000 crores. So I think while the space has moved up significantly, there probably still is some amount of room to grow, given the fact that you're coming off a decade of weakness. Capital goods is again something which we are kind of watching. We are again more comfortable on the larger names. I think in some of the small cap names, there's a lot of flop. But in some of the larger names, we are reasonably comfortable. And I think the one other space we clearly like is BFSI. Now, within BFSI, we aren't only focused on banks. So banks is a big heavyweight. What we do kind of like are capital markets and other such bits.
Okay, got that. Ashi, a little short in time today, but thank you very much for explaining the way you've constructed the portfolio right now. We look forward to a longer chat perhaps next time. Thank you for joining in. With that, let's take a very quick break. By the way, the market's just moving from strength to strength. It's a near 200-point rally on the Nifty right now. We'll take a break and come back with some of the key budget expectations from important sectors like real estate.